So the numbers, the Dow was up 2.5% on the week. NASDAQ 3.6% on the week. Russell 2000, 2.8, and the S&P as well. Gold stocks got hit. Gold was down 2% on the week. It closed at, let's see, 3,240. I think something like that. Let me take a look. Yeah, 3,241.60. And, I heard a lot of talk. That's it. The bull market's over. Blow off top, right? Finally, it's over, right? It was too speculative. There was no speculation there. Yes, it got a little hot for a few days. And now it's come down.
In today's news recap, gold rebounds from 2-week low, U.S. jobs data in focus. Gold gained on Friday as investors rushed to buy the metal a day after its prices hit a 2-week low amid receding trade tensions, while the market's focus shifted to the U.S. non-farm payrolls report due later in the day. Gold hit its lowest level since mid-April in the previous session and has lost nearly 2% so far this week, the steepest weekly fall since late February. U.S. gold futures rose 1.3% to $3,263. There have been softening stance on tariffs, and situation has improved a bit, but still there are a lot of uncertainties, so gold will still be preferred by investors, said ANZ commodity strategist Soni Kumari, adding that every price correction in gold is seen as a buying opportunity. If prices continue to decline and approach the $3,000 level, it could attract a lot of investment demand. Beijing is evaluating an offer from Washington to hold talks over U.S. President Donald Trump's 145% tariffs. China's Commerce Ministry said, although it warned U.S. not to engage in extortion and coercion. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
So it went down and then it came back up. But the market was way overvalued before it went down, even absent the trade war and the tariffs and all that. The market was already poised to go down. And the economy is in bad shape. And we're going to get into that later in the podcast. So there was a lot of reason for the market to go down. The question is, why did it go back up? And I think the reason for this rally, and I don't think it's going to sustain itself. And, there's an old Wall Street adage, sell in May and go away. And so the people who sold in April, it looks like they didn't go away. They came back. But maybe there'll be some selling in May. And if you're smart, you'll go away, or at least go to foreign markets, go to other investments that have a lot more potential than the U.S. stock market. But I think what really powered the gains was the appearance of a de-escalation of the trade war and some optimism that, hey, maybe it's not going to be as bad as we thought, when, of course, it's actually going to be worse than they thought. They didn't realize how bad it was going to be. But now they think it's not going to be as bad as they thought, because of a lot of the rhetoric coming mostly from the Trump administration, but a little bit also coming out of Beijing regarding lowering the tariffs and, trying to find some kind of resolution to the tension. In fact, China announced that they were going to be rolling back some of their own tariffs just unilaterally. They decided that, some of these 125% tariffs, that they were going to roll them back because they realized that some of these goods that they are importing from the U.S. are very important, and maybe they don't have a readily available substitute. So they want to lower the tariffs because the tariffs harm themselves, which is what I've been saying all along. I mean, if the 125% tariffs just harmed America, then why would China want to lower them? They're lowering them because they understand that tariffs always hurt most the country that imposes them, which means all of our tariffs are going to hurt us way more than they're going to hurt our trading partners, which is what I've been saying from the beginning. But here is the ridiculous part of it. So you could say, well, maybe this is some kind of olive branch that, the Chinese are laying out there, right? They're unilaterally dialing back some of these tariffs. But I was watching an interview with Scott Bessent, and he seemed annoyed by it. And he said, look, I've got an escalation letter in my back pocket. I might have to pull it out, where we're going to embargo those goods that China is reducing the tariffs on. So in other words, we wanted to punish them for reducing the tariffs. I mean, which is it? We're claiming that the problem is China has tariffs that are keeping our goods out. And so we're trying to punish them for having tariffs or too high tariffs. Then China lowers some tariffs back, and we want to punish them for that too, right? It's completely inconsistent. But what Bessent was saying is, aha, China is showing us where they're vulnerable. They're showing us what goods they really need. So let's prevent them from having those goods, right? But, one of the things about the Constitution, I don't know, if an embargo would qualify as an export tax, but Congress is given the authority in the Constitution to tax exports. So tariffs are okay, but they're not allowed. In fact, they're specifically prohibited, not that they even have to be, but they can't tax exports. They're not allowed to do that. So we couldn't tax products that are being shipped to China. Now, maybe an embargo where you can't even ship it, maybe they can come up with some BS national security reason why we can't send China these products. And maybe that somehow would pass constitutional muster, which isn't really hard to do these days because they kind of get away with murder at the government when it comes to the Constitution.
In today's news recap, Chinese investors slash gold futures positions by 1 million ounces. Key trading insights as gold prices surpass $3,500. According to the KOBEC letter, Chinese investors reduced gold futures positions by approximately 1 million ounces on Wednesday night, marking the third largest reduction on record. This follows a significant buildup of 1.2 million ounces on April 22nd, highlighting sharp shifts in trading sentiment. The adjustment coincided with gold prices briefly exceeding $3,500 for the first time, suggesting a potential profit-taking phase or risk management strategy among large-scale traders. Such large moves in gold derivatives may lead to increased market volatility and influence short-term price trends. Traders should closely monitor open interest and volume changes for potential breakout or retracement signals. The cryptocurrency market has been buzzing with indirect implications following a significant move by Chinese investors in the gold futures market. On Wednesday night, May 1st, 2025, Chinese investors reduced their gold futures positions by nearly 1 million ounces, marking the third highest reduction on record. This dramatic unwind comes just weeks after these investors added a record 1.2 million ounces to their positions on April 22nd, pushing gold prices to briefly surpass the $3,500 mark for the first time in history. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics Handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
Some people will be priced out of the market and they won't buy, but other people will be reluctant to buy because they don't want to be the sucker to buy it right before the price plunges. So all those decisions are going to be impacting future economic numbers. Factory orders, they were up 4.3, not a terrible number, but lower than expected. They were looking for up 4.5. In fact, the range of expectations was from up 0.5 to up 8. And we got, so in the middle of up 4.3. So kind of in the middle. The prior number was a lot lower. It was revised down from 0.6 to 0.5. That wasn't the worst number that we got on the week. But we got the international trade deficit again, another horrible number. Not as horrible as a couple of months ago, but worse than February. The February number was 147.8 billion deficit. This is the goods deficit, right? This is not the unified deficit that includes our services surplus. $162 billion trade deficit. And the one thing that really bothered me coming from the Trump administration this week was I learned about this new executive branch, which is a private social club that's opening up in the Washington, D.C. area. And it's owned by the president's son, Don Jr., and a few other crypto insiders. I think David Sachs has got a piece of it, the Winklevoss, maybe Luskin. I forget the exact, cap table, the owners of this company, but everybody was either a crypto Trump insider, so they own it. And of course, it's being led by Trump's Jr. The cost to join this club is $500,000. That's the entry ticket. And it's basically, I don't know, it's like a restaurant. You go for lunch, you go have a drink. I'm not sure if they have like some tennis courts in the back or a gym or something. I'm not really sure like what you get for your $500,000. And I'm not even sure what the dues are, because I'm sure it's $500,000 to join. And then you probably have to pay, a monthly bill. But what they're saying, the way they're advertising this is, hey, this is a way to get access to the Trump cabinet, because the cabinet members, well, they're going to hang out at this club, right? Maybe they get complimentary membership. So they're going to be there having drinks, having a meal. And so if you want to socialize with these cabinet members, well, just pay the president's son $500,000 and there you go. Now, what do you think people are going to want to talk to these cabinet members about who paid $500,000 to sit at that bar? What do you think? They just want to talk sports? Of course not. They're going to be talking about special breaks, maybe tariff exemptions. That's what the president really has to hand out. You put tariffs on everybody, and then you just give exemptions to the people that, curry favor with you. And one way to do that is, well, you want to talk about a tariff exemption? We do all those discussions at the executive branch club. So pay $500,000 to the president's son, and you'll be able to get a seat at the table where you can, buy drinks for cabinet members and whatever, and you might end up with a tariff exemption. Look, this whole thing stinks, and nobody is talking about it, especially after the Bidens and what happened with Hunter Biden, selling his father's influence. At least Hunter, did it with shell companies, right? He at least laundered the money, honestly. Maybe honestly is not the best word, but he at least tried to hide what he was doing, right? But Don Trump Jr., he's just brazen. Talk about chutzpah, to just do it way out in the open. Like, hey, I'm not going to hide what we're doing. I'm just going to set up a club where you get access to the cabinet and you pay me $500,000. This is the second most expensive club in America. The most expensive club is, you guessed it, Mar-a-Lago.
What do you think of Andy Schectman's call for gold surpassing $4,000? Is he spot on, or do you see things unfolding differently? Do you think we're finally entering that explosive bull market he's been predicting, or could this just be another peak in the cycle? More importantly, are you stacking right now? Are you positioning yourself in physical gold and silver, or exploring mining stocks instead? Let me know your thoughts below. I'm reading every single comment. And remember, stay vigilant. The financial landscape is shifting fast, and opportunities like these don't wait. Now check out this video right here, and I'll see you on the other side.